This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute today for Friday, May the 14th, 2021, at the end of another very volatile trading week in Chicago on South Street and definitely in New York on Wall Street as well. Let's take a look at some of the headlines this week that help shape the futures trade that we all pay attention to. Coming into the week, we had extensive rains in parts of North Dakota on the spring planted wheat and across a good portion of the Corn Belt. We opened the week up gapping lower on the futures chart Sunday night. A lot of reason for that was because of that rain, much larger than expected. Coming into the week also, when we looked at the Commitment of Traders report last Friday afternoon, we saw the managed money speculator long 10,000 contracts of wheat, long 372,000 futures contracts on corn, and 174,000 long position on the soybean side of things. And remember, going back to the middle of March when the CME group that owns this futures exchange expanded the limits of futures contracts that the managed money speculator participant can hold, we've seen a lot of volatility since then. We know that this participant group can now hold more futures contracts. They can trade more contracts, and that's definitely, really since the 1st of April, been contributing to the type of volatility that we've seen. Also remember that this is the end of the second week of expanded daily limits for corn to 40 cents per bushel per day, up or down. Soybeans at $1 per day per bushel, and 45 cents on wheat. And we saw this week a limit down move, a 40-cent down move yesterday on the corn board. So that was pretty disheartening, and we're seeing the volatility come. We've seen it come. We know it's going to be here to stay, and these expanded daily limits are going to be, maybe not the word that I should use is encourage, but maybe it's going to be encouraging some of that volatility, or given the influences that make things volatile, more room to run. We saw this week ADM announce a new soybean crush plant to be built in North Dakota. I believe that's the first crush plant in North Dakota to be built. We know with renewable diesel, biodiesel, and all the need in the world for vegetable oil, for soybean meal, this is a needed plant that's going to be built and good for demand. We saw on Wednesday the ethanol report. Again, ethanol following corn closely this week. Production was up 2.8% and 979,000 barrels per day. And we saw a big drawdown in stocks. Stocks down 5.1% week over week for 19.3 million barrels. Really this week we had a few black swan events come in that got a lot of media attention and definitely got the speculators' attention post WASDE report this week. One obviously would be the Colonial Pipeline shutdown that started last week and is in the middle of being resolved this week, and along with the I-40 bridge over the Mississippi River in Memphis, Tennessee, and how that structural issue there with that bridge, with a steel girder and with it being closed, and then with barge traffic being closed for several days, really a sensitive market here being led by the speculators. Headlines, those stories caught their attention this week, and I think both of them had something to do with the profit taken and the sell-off we saw in futures this week. But keep your eye on those two events and how the pipeline will go back on getting to 100% capacity, and what's going to take place on the river. We heard today from the Tennessee River Authority that barge traffic would begin moving again, and they said it would take about 2 days to get the roughly 1,000 barges that are backlogged back on track. We did see this week from multiple meteorological associations and organizations that confirmed the end of La Nina weather pattern and weather event, and we will see them telling us now that we're in the neutral position. We also saw this week from some of the ag ministry and some producers in Mato Grosso state in Brazil that there's corn acres down there that haven't seen any rain in 30 days. And we know that dry weather in Brazil on their second crop corn has been price supportive on the Chicago futures. Another announcement this week, back to ethanol, POET announced that they're going to be buying Flint Hills ethanol businesses This would help them grow larger as the #1 ethanol producer in America. I did see one statistic this week. I didn't dig and back it up too much, but one statistic I read this week said it would take them to making about 18% of the ethanol in the United States. Argentina's Ag Ministry said their soybean harvest is 71% complete, corn at 25% complete. And we also saw a private analytic firm, 20-year-old company called CoFeed, that's based out of Beijing this week, go dark after 20 years, and it's left a lot of analysts wondering where they're going to get information now on the Chinese agricultural industry. Let's take a look at how the futures closed out this week. We gapped lower on the open Sunday night from where we closed at on Friday for corn, for beans, and for wheat. Your December corn futures contract was down 94 cents a bushel this week to close at $5.42. November soybean futures down 33 cents this week to close at $14. July wheat down 54 cents a bushel this week to close at $7.07 a bushel. So we got the WASDE report. It was our first look at the 21-22 marketing year that will begin on September the 1st for corn and beans. Pretty much all the numbers in the report for corn and beans came in within expectation. We did see the new carryout for 21-22's corn and bean crop. First look at that from USDA. Corn came in at 1.5 billion. Beans came in at 140 million. Those are extremely tight. No room for error on the production side. Same goes true for this year, where we're looking at a carry out of 1.2 billion on corn and 118 million told to us this week by the USDA for soybeans. So a very, in my opinion, price supportive report, WASDE report. All the things that we've got supporting the bull right now and supporting these prices to be where they are from a production and supply side is still there. We know the demand is there. We saw multiple days this week, again, with flash sales announcements from China on corn purchases. We've got weather in the mix. We've got a lot of influences that are supporting these higher futures price. However, this week is a sobering reminder when the market is controlled by the speculator, these large managed funds, they can pull profit out and pull money out fast. So it brings us back to marketing. How do we market in an environment like this? Give us a call to talk about that. But we're going to say a lot here and over the phone about making small incremental sales over a long period of time to try to hit the average in such a volatile market. Next week, we're going to be watching Brazilian weather. We're going to be watching weather here in the U.S., looking for more flash sales announcements, seeing how economics and economies are going to react to the new COVID guidelines issued this week by the CDC. And remember, the word I'll end with is black swan sensitivity. The market is going to be looking for more black swan events, and we'll see how they trade that. This is Robert at Virginia Farm Bureau's Grain Division.